Looks like you had quite a strong quarter, in particular in your materials business. Break down for us the demand trends you saw over the course of the last 3 months.
Good morning, and thank you for having us. Indeed, we've had a good start to 2021, a good half year. And indeed, if I look at the different moving parts, maybe I'll start with our nutrition business. What we're seeing there is that we have continued good business conditions for our animal nutrition business pretty much across the board. And we've seen continued positive momentum on the human nutrition side on the back of what was already a strong year last year with all the focus on immunity around COVID. So if I take nutrition overall, that basically takes us to an organic growth of 8%, 6%, sorry, on top line, and an 8% increase in EBITDA in our nutrition business. Now, as you correctly pointed out, our materials businesses had pretty exceptional results. Now, this is on the back of course, the COVID year last year. But even if I park 2020, what we're seeing is our materials businesses have delivered an 11% volume increase, leading to a 23% increase in EBITDA. And the main drivers behind that are really a combination of end sector demand. So we're very much serving the automotive and the E&E end markets. But we also saw a lot of restocking along the value chain as the economy is picking up. And because of the disruptions in the supply chains, and I'm sure you've heard quite a lot about freight and logistics and the complexity of actually fulfilling the order book, we're seeing a very positive pricing momentum in the market right now. Hence a pretty high margin on our Q2 numbers in materials.
One of the other key questions, in addition to demand, of course, is what's happening on the raw material side of things. So give us some insight, please, about what you've seen in terms of raw material cost inflation so far, and more importantly, where you're expecting raw material prices to go in the second half of the year.
Yes, we are seeing raw material prices going up, and that really has to do with this strong order book environment, everyone trying to replenish the supply chains. And the way that we see it is usually it comes with a bit of a delay. So it's about really staying on top of pricing and being able to pass it through, which we have been very successful in doing. We do expect raw materials to continue to trend upwards, and that has partly to do with the fact that simply fulfilling the order books these days takes a lot of running. And when you go flat out, after a while, you do have to do maintenance stops. It is important, to regroup, and that will continue to be driving that raw material backdrop. But importantly, of course, it's about being able to translate that into higher pricing, and with a margin above 24%, we've been very successful at doing that. But we do see this continuing into the second half of the year.